It's time now for an in-depth look at the market action here in Korea and around the world. And for that, I'm joined on the line by Dr. Hwang Seiwoon, Research Fellow at the Korea Capital Market Institute. Dr. Hwang, thanks for coming on today.
Thank you for inviting me today.
So the U.S. China trade war continues to weigh on Wall Street, apparently. Markets reopened on Tuesday after a holiday. The Nasdaq down around 0.4%. The S&P down more than double that. Take us through today's trade.
U.S. stocks fell to the lowest since March as a rally in 10-year Treasuries rekindled, concerned that a key recession signal has started to flash warnings amid what could be a protracted trade dispute with China. Stalled talks in the U.S. China trade war and escalating tensions have soured sentiment for risk assets. That's driven sovereign bonds higher and pushed global stocks towards their first monthly decline of year 2019. With the Federal Reserve reiterating last week that it remains fully in patience mode, investors have little reason to bid stocks higher. Asian shares stumbled on Wednesday and global bonds rallied as investors fretted over the outlook for world growth. Japan's Nikkei faltered 1.21%, while South Korea's Kospi was 1.25% lower than the previous session. In contrast, China's Shanghai Composite rose 0.25% today.
Now, exchange rates, which have been affected by the U.S. China tensions, the Treasury Department just released its report, and it has perhaps surprisingly decided not to label China a currency manipulator. China is on the watch list, though. How have the markets responded?
The Trump administration again refrained from labeling China a currency manipulator on Tuesday, a decision that leaves one of the president's campaign promises unfulfilled, but avoids further escalation in the trade war between the world's two largest economies. Impact from the currency debate to the stock market is not quite sizable so far. Beyond the currency debate, trade dispute is still the largest battlefield of the global stock markets. The fact that China wasn't labeled a currency manipulator suggests the two nations are continuing their dialogue. However, this doesn't mean markets should be optimistic. Even after the report was released, the local currency kept its losing momentum. The local currency was trading at 1,195 won against the U.S. dollar, up 5.51 from the previous session's close on risk-off sentiment. The Korean won had lost 4.6% against the greenback since April.
Right now, bringing it back home here for a bit, the Korean government taxes the buying and selling of stocks regardless of whether the investor made money or not. This transaction tax is going to be lowered effective tomorrow, May 30th, by 0.05%. So on the Kospi, it'll be 0.1%. Will this have the desired effect of stimulating the stock market?
The Korean government will begin to lower the tax rate on securities transactions by 0.05 percentage point from June in an apparent move to stimulate the local stock market. The transaction tax is imposed regardless of whether an investor logs a profit or loss, which has angered investors who suffered heavy losses last year amid sluggish stock markets. The cut in the transaction tax is expected to help increase stock trading and improve stock market valuation. Last year, the government's tax revenue from stock transactions amounted to a record 6.2 trillion won, up 38.4% from the previous year. This implies that the local stock market will be able to retain as much as 1 trillion won per year from now on. If so, it is highly likely that the capital inflow to the stock market and trading activities will increase.
And we'll see what happens with that in the next couple of weeks. Well, Dr. Hwang, that's where we'll have to leave it today. We appreciate your insights. Thanks for coming on.
Thank you very much.